Hello everyone, in today's video we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the bonds, and the dollar. Alright, so without further ado, let's get started with the video. Alright, so in yesterday's video we were taking a look at how the bonds are correlated to the overall market. Obviously, they are not correlated in the short term, but my thought process is that in history, when the bonds are extremely overextended to the upside or the downside in terms of the Bollinger Band, that's when the correlation persists. So right now, we're looking at the bonds being very overextended to the downside in terms of the Bollinger Band. When this happens, there is a reversion to the mean that ends up happening and the bonds bounce back up, okay? Now, in history, when the bonds have been this overextended to the downside, the S&P also, on these exact times, also ends up bouncing. So multiple times in history, this has ended up being the case. So the orange line is a chart of the SPX. Okay, so this past instance was back in October of 2022. The bonds were very overextended to the downside. The S&P ended up rising dramatically afterward. Right. Again, this ended up happening over here in September of 2022, and basically the bonds were very overextended to the downside. The SPY, what ended up happening was very interesting. The SPY made a bounce, made completely new lows. They made the overall market look extremely bearish, and then they ripped it up. So this is the pattern that usually ends up happening. All the while the bonds were showing a lot of strength. So what we need to see is the bonds need to continue showing a lot of strength. And the best case scenario is if the S&P ends up making a completely new low while the bonds are continuing to rise up. That would be the best case scenario, and we would go long. We could easily go long down here if the S&P, the SPX ends up making new lows. So we could see that this happens usually within a few days. This was September 28th. Within basically 4 trading days, we end up making a new low and bouncing, and we end up making completely new highs here. So that is basically what I'm expecting to end up happening. So now, honestly, we don't really need to look too deeply into the market. This is the chart of the S&P 500, right, on a daily. And I was saying that obviously yesterday's candle wasn't bullish. That was clearly a very, very disgusting candle, right? But we're at a level of support, and going short at levels of support is just not smart. So, you know, we bounced off of this level of support after a very disgusting candle. So it looks like a lightsaber. No, actually, no, it doesn't. But yeah, kind of, it looks like a sword. But anyway, disgusting candle. This is, but going short at levels of support is not safe. That's why we just have to keep it simple, especially now. And essentially what I'm looking for is we need a comfortably close above 441 on the SPY, then maybe we can continue going up higher. But regardless, if the bonds, very simply, guys, very simply, this is really it. If the bonds continues to show a lot of strength and the SPY ends up making new lows and we start becoming very bearish on the SPY, we can easily go long on the SPY. And in yesterday's video, I was saying the easiest trade you could take is literally just take calls for 1.5 to 2 months out. And if you did that, I mean, you would already be up. But basically, that's my thought process. You could easily have calls for basically 1.5 to 2 months out. If we get another rip down while the bonds are showing strength, then, you know, it's an even better opportunity to go long on the overall market. And the other thing I was basically explaining was that the IWM was going to get a lot of love because there's a lot of bank earnings and economically sensitive stocks that are going to have earnings on Thursday and Friday. So basically the IWM was the biggest winner today. The NASDAQ was taking a huge hit. The IWM is up 1.7% today. The NASDAQ was up only 0.03%. Clearly a lot of all the tech stocks took a huge hit today. And yeah, that's another reason why the SPY couldn't be that green. The SPY was mostly green because of the Russell. And yeah, honestly, we just have to take it very slow, very simply. These are the levels for the overall market. That's the trajectory for the overall market. And that is currently what everyone is watching for, the bonds and the overall market. And the last thing we can take a quick look at is the dollar. Obviously, the dollar, we know has an inverse relationship to the overall market also. If the dollar is showing weakness, then the stock market should be rising. So the dollar is continuing to fall here. And we're getting close to breaking down a bit lower on the dollar, but this is generally where bounces occur. We're we're oversold now on the MACD. And yeah, guys, it's not, it's not too difficult. There's not really that much to look at, and I don't want to waste really anyone's time. So that's basically what I'm looking at. So I hope you guys enjoyed this content here. And then one more thing that I want to take a look at is shameless plug. I just launched the first app in history. You go to joinwave.io. It's the first mobile app in history that shares live trades completely for free. Options, stocks, crypto, forex, and futures trades completely for free, right to your phone. No joke, no gimmick, completely for free. And we're setting a new standard for the retail trading financial market. And it is what it is. There goes the neighborhood. And none of this would be possible without you guys. I've been telling you guys that everyone was very, very early to things that are yet to come. We're still very, very early. There's still so much left to do. And things are just getting started. All right. So once again, the link is in my bio, joinwave.io. And yeah, guys, really, really appreciate it. And things are it's going to be amazing. All right. So yeah. All right. Take care. Have a good one. Hope you guys have an amazing day. Make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys bright and early tomorrow morning. Thank you.